Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 11, 2020. What we'll do in this video is take a quick look at gold, do an update on gold, silver, and the mining stocks, and that's it. So we'll keep the video limited to those. So far, so good on the sell signals we had on Friday. Yesterday was another objective short entry with that kickback rally in gold and silver, and today we're starting to get some downside traction on those trades. Gold's down about 4.4% right now. This is a weekly chart I started out with, but I just want to point out that so far, you know, my suspicions that this would be a momentum fueled overshoot of the of that major reaction high that was the previous bull market in 2011. So far, that's the case. You can see there. I'll zoom in nice and tight. You can see this big red weekly candle, and that's pretty much all today's damage. We'll look at that in a second. And what I want to do is give you some levels to, you know, well, for various reasons. Some of you may not have shorted, some of you may still be in longs, some of you may already shorted looking to cover, play a bounce. You know, there's a lot of ways to trade. An active trader can game, you know, if I think gold's going from point A to point B, there's actually various, you know, levels in between in which an active trader can game some bounces and, you know, maybe cover re-short on a bounce and so forth. But I still think gold's coming down most likely to at least this uptrend line right here, somewhere in that area, and or that 170, we'll call it 174 support level right there. There is a big old gap right there, and even on the weekly chart. You don't see many gaps like this on a weekly chart. So I wanted to point that out, that as of right now, gold is at support. So as I'm doing this video, it's 1:39 p.m. Eastern time. Well, we already hit that level, so we already started to have a bounce, and you know, at the very least, I think that's where we get a reaction. Here, let me flip over and show you how it looks on the, probably see it best on futures. Right there, you can see the gap. I'll just put a line there. There's a gap right there. So we're at gap support. There's another trend line on the GLD daily. What I circled here is a PPO is making a bearish crossover, poised to do so at high levels here on the daily chart. Go back to the weekly chart, and you can see the PPO rolling over there as well. But what I wanted to show you is gold futures. I gave you this chart recently showing you these targets. Here was our first early sell signal right here. Boom, crack of the minor trend line. Hit my first target, that uptrend line there, had a bounce reaction. I think this is where we were yesterday, stating the next sell signal would come on the break of that trend line. So that was it. So there were multiple, you know, multiple entry points. Even if you missed the first one. And this is what I'm talking about, active trader stuff. This is what, you know, things don't go straight down. Lately, since yesterday's, you know, kickback rally, that was a golden shorting up right there. You know, gold futures have dropped, what is that, almost 6% since then, and silver a lot more. I told you I expected more bang for your buck shorting silver or the silver mining stocks. So that's it, and most importantly, and the reason I do these videos is that we are at support. We blasted right on through this target because this was a crowded trade. Gold and silver has been a very crowded trade. And sometimes you get this once it's clear to all that the music is stopped. I'm talking about, I always use the analogy, a game of musical chairs. It's a little game children play where you set up a circle of chairs to play music. Everyone runs around. There are 10 kids in the room, but there's only 9 chairs. So when the music stops, if you don't sit down, you don't have a chair. That's kind of, we'll talk about trading when you're momentum trading. You know, it's fun to be long gold when the music's playing, but when it stops, if you're the last guy or gal standing without a chair, meaning you didn't use stop loss orders, you can give back a lot of your gains very quick, especially if you chase the rally towards the latter stages. You know, if you bought back here, you're fine. So that's it. Either way, at support, and that's a pretty good one right there, about 1950 or so on gold futures. There's your divergent high. So I do expect a reaction here. We already had a pretty impulsive move, big drop one day, and so your next objective shorting levels would be a bounce back to 1997. Even though we didn't have a reaction there, I still think it's very much a significant technical level. So anywhere close to that 1997 level, that would be an objective add-on or re-entry if you want to cover here, or a solid break in 1951. Now we shot a little bit below it today. In fact, I'm doing the video, we're a little below it right now, but just like I was talking about on silver and gold on the weekly charts, what I refer to as a momentum fueled overshoot of those supports. That's what I think this is today. This is what we have a lot of, downward velocity, near vertical drop. It's more than common. In fact, to be expected that you're going to just overshoot that level, even if it's the one that holds, and then get a kickback rally. Now, should we clearly move on through there? Certainly a possibility. And let me just wrap this up by saying, active trader, sure, you might want to try to reverse a bounce here or not. Typical swing trader, if you're short gold and silver, I try to say don't try to get too cute. Don't go outside your comfort level and your experience level and try to game all these counter trend rallies, because what may happen, you may get shaken out of the trade and you might not be sure where to get back in. And so, you made a little bit, but I think there's more meat on the bone. And, that amount of meat is another, at least in gold futures, about another 7% or so downside from here in the coming days to weeks, I believe. All right, next up, silver. Let's go to silver. Also start out with the weekly chart. This is my major resistance zone. Again, suspected that was a momentum fueled overshoot. So far that's been the case. The 25.40 was the top of the zone. We overshot it last week. Closed just a hair above it. Followed up a little upside this week. That's why this candle's higher, but boom. Big reversal back there. So big down day. Silver's down over 10%, so it's down twice as much as gold. So that's, part of what I try to do on this site is, if I'm going to be bullish or bearish on the precious metals, mining stocks, if I'm bullish or bearish on commodities, which ones look the most bullish and which ones look the most bearish. And, so like I said, it's, you've got, whether you have $10,000 or $10 million to invest, you can place those funds into something. These are highly correlated trades. One's going to go down, the other's probably going to go down as well. Gold and silver tend to move together, and at times one or the other will get ahead of itself and the other will play a game of catch up. So I think this is just silver playing a game of catch up to the downside. Had a more powerful lift over the last few months here. So that's it. Let me look at levels where silver may bounce and where it's ultimately going. Just like I was targeting that trend line in gold, I'm targeting this uptrend line right here in silver, and that is about 2150 or so is a minimum target. So let's just see how things go. Should that level go, I'll tell you now, a little couple gaps here, but this is big support. So if we do drop, and I can easily see it based on what's going on the weekly chart. PPO is starting to roll over at high levels here. This is a daily chart, SIL. Or SLV, the silver ETF. So let's draw it out. Something along these lines. My minimum target right there. Most likely get a reaction, put pretty good odds on that, and then ultimately move on down here to what would be, at this point in time, my maximum swing target. I'm still longer term bullish on silver and gold. I'm just near term and intermediate term bearish. So that would give us, what would it give us? About another 12% minimum downside if my minimum target's hit, and about 27%, and that's from where we're at, not from the top. We already, milked a nice 10% plus move off this so far. Silver futures, I want to point out. Let's take a look at those charts. Let me dig it up here. Got it down here somewhere. Here we go. SI. All right, so here's where we were yesterday. Again, objective shorting entry pointed out we had the sell signal here the other day. That was last week on Friday. Hit this level of support, bounced. Typical kickback rally, and at the time I said, my minimum target's down here, and that was from yesterday's move. That's line's about 16%. So far we're down probably 2/3 of that. So again, you can see it down here on the bottom. Silver futures down 11%. If you trade silver futures, I don't have to tell you how much money one contract, just a single contract SI will put in your pocket. And if SI is too big, the leverage factor, they do have the mini contracts now in a lot of the precious metals, gold and silver. I think silver's QI, if I'm not mistaken, for the mini contract, and it trades off the same levels, so you can use these charts. You're just using a smaller leverage factor, and even that would still put some put a few bucks in your pocket if you're short QI. So where does it go? I'm going to add a level that wasn't there yesterday. I wanted to wait till I did the video, but there is a reaction high right here, that previous divergent high, and within there you had another reaction right here. I'm going to zoom in a little tighter for you and you'll see. That's why I just added. So where I'm going with this, I showed you gold at support a second ago. Silver, same story, just slightly overshooting what I believe a momentum fueled overshoot of that support level. See the reaction here, and you had one a little bit right about there, give or take. This doesn't have to be exact, but about 26.40.11. So I do have silver at decent support. But again, whether we get a reaction here, which I favor, put decent odds on it or not, and that's again speaks to the swing trader. If you're just a typical swing trader and you don't want to risk, if you're holding out for this, it's probably not worth it to try to cover and reverse. Again, if you're an active trader, I don't even need to tell you that. You know what to do. If you're not, then maybe at this point lower stops. But if we do bounce back, I wanted to give you that level, that 27.37 level. Pretty good shot. If we bounce back there, that would cap the rally. That's pretty decent resistance. Former support, once broken, becomes resistance. So that's where we're at, and that's my preferred scenario. I have us going down here, but probably do this tonight into tomorrow, and then something like that. Again, these are called micro calls. I refer to them as micro calls. You're always going to eat crow. The more specific you try to get, it's like a weather forecaster telling you, okay, 80% chance of rain tomorrow. Great, that's pretty vague. Or trying to say, it's going to rain. I start at 2:30. I expect it to rain heavy, and then stop at 3 p.m. and start back up. Those are more micro calls, and the more granular you get, the harder it gets to do. So I can tell you, higher degree of confidence that we're going to do this, but a pretty good degree of confidence we're going to do that first. So that's that. If that level goes, that would open the door to much more. Remember, we just put in a big divergent high. Silver really got ahead of itself, and there was your sell signal right there. And here's another longer term trend line. I zoomed in on the chart, but just wanted to point that out. If you want to replicate the silver futures chart, look at this trend line right here. It comes off about the early June lows. That is another potential target. So next target, this one's just been hit. Next target here, then 22.56, then the uptrend line, and or probably come in roughly together about 1983 right there. All right, the miners, GDX, like I highlighted recently, just a beautiful bearish rising wedge pattern on GDX. And obviously if the metals broke down, which they have, you're going to see the miners follow, and there it is. Nice. So more bang for your buck in the miners. As I said, you can short gold, or you can short GDX, or go long GDX when gold is bullish. And as I often say, GDX or the gold mining stocks are simply a leveraged trade on gold, meaning if gold goes up X, they tend to go up X times whatever, and ditto on the downside. So there it is, about 8%, 7.5% drop right to my first target. I have a target at 39.09. More of a support zone, goes down to 37.47. So chances are we get a reaction here. Buyers will step in later today into tomorrow, and then another move down. We may just go on through there because this is a pretty blatant, pretty obvious breakdown to all. You don't have to be very skilled at technical analysis to see that trend line, and also say, hey, wow, what's up with that big drop there? So that probably is going to shake out a lot of the Johnny-come-lately longs that didn't want to buy back here, but wanted to buy in the last week or so after how much has GDX moved up off the bottom, 183%. So those stops are getting hit. That's why you get these impulsive moves. It was a momentum trade, and the momentum has at least for the time being, burst. It could be a one-day wonder, but I really doubt it. There's a lot of evidence in the charts that we were going to get this. So there we are at support now, our first target. You can book profits or hold out to here. That's my first target zone. And then just like the gold and silver, at this point in time, my maximum swing target at this point in time, again, is 31.33. The charts are dynamic, they're constantly changing, therefore so is my analysis. So if we happen to start heading down that way, I might see something different in the charts that convince me to hold out for more. But as of now, that's what we're looking at. And that, just try to put in perspective, that would be a drop of about another 21% in the miners from where we're at now. SIL is your silver miners ETF. That's right actually at trendline support right now. Same thing, little divergent high there, but I suspect that goes. Still looking for a move down here at about 37.67. If so, that's a drop of another 16-17%. And then max swing target at this point in time down here at about 33.82. That would be about a 25% drop. And then wrap the video up. Some of the ones that I highlighted recently as my favorite shorts on individual stocks, individual mining stocks. We have MAG. MAG broke down recently, was kind of back testing. Well, it was back testing, and once we had those sell signals on gold and silver last week, that's when this one started to roll over. So it's moving down about another 7.5% today, already good for off the highs. So far it's dropped about 16%, and my minimum target was still, what is that, $13.92. We'll call it $14. You always want to cover a little bit above support. But again, big divergent high. So there's very much the possibility that we can see more than just this. It depends on how these charts play out. But that's some pretty big negative divergence. But again, let's just focus on that target now. We'll see how the charts shape up. WPM, another one that I highlighted in the videos in the last couple of weeks, broke down, gave you a clear sell signal on Friday, follow up with another red candle below the wedge yesterday, and boom. And this is what I talked about yesterday, and what I talk about a lot with, when you see these patterns, if you I like to get in early, start scaling in, as I told you I had been, start building some short positions and then add, because if you're waiting for a green light to short, or go long sometimes on a breakout, sometimes the market denies that. What I mean by that, well, here's where we closed yesterday at the bottom of that red candle, and we opened today at, the open was 49.34, so it was at the top of the body of that candle. So to try to put in perspective here, we dropped, the gap down was about 6.5%. And we gapped almost to that first target. So that's not an objective entry. You missed. If you waited, a lot of these stocks, including silver, which gapped down big, just denied you an objective short entry today, because you're gapping down in this one, 6.5% after a drop of already, from the highs. Now it's about 16% drop. So we're getting near term oversold on the shorter term charts, and you're just above support. So TA 101 says you buy a drop to support or wait for a break of support to short it, but you don't short when you're just above a price target or short. There's just not enough meat on the bone to risk getting counter trend bounce. Now, if we do get a counter trend bounce, I'll give you a level right now that it looks good, right about there, 15,259. I wouldn't wait for the last penny. Come in a little earlier than that, a little kick back to that level. That's decent, pretty decent resistance. You can see all these candles right here that at the bottom of that level. And that's it. And reaction there likely off 47.60. But again, you have to watch, if silver and gold hit support, and a lot of the other miners, WPM would probably reverse a little shy of that level if the buyers stepped in those other mining stocks, especially in the precious metals. So you have to, that's why I do these charts. That's why I go over everything. You have to keep, either multi-monitors if you can do it, and if you're using one monitor, just keep an eye on everything, because they all tend to move together. There it is, next target down there if things get ugly, about $37, and that would be an additional from where we're at now in WPM. Like I said, a lot of meat on the bone on these miners. It's about another 24%. Remember, we've already dropped about 16. SIL is the ETF, one of them, and that's, again, I think I already hit on that. If not, we're right there at the trend line with that minimum target. Yeah, I think I already covered this one. And then a couple more here. SLVP is another silver miners ETF. This is the iShares Global Silver Miners ETF. Look at that, clear sell signal, nice breakdown, clearly below the $17 support as well as the uptrend line. First target, 14.92. Then 13.09, and max swing target there is about 11.58. AG put in a nice little small divergent high. That's what a lot of these miners did recently, small divergent highs there. Sometimes it doesn't take much, especially after a big rally. And sell signal was triggered on 1276. That's where I almost highlighted that recently. That's why it's color-coded blue. It's support there, but there's another case where it didn't give you a very objective entry. If you weren't already anticipating the breakdown, at least have a partial position, you could have added to a, if you had a starter position, you could have added to that today. But now we're already close to my first target, which is the uptrend line and that 1094 level, just a hair below. They're close enough. So that's the T1 right there. And you can see some of the other levels. There's silver. This is just a compilation of silver mining stocks. Clear sell signal on this is TC2000. They use IX1120 as the silver sector. And FSM, Fortuna Silver Mines. Right now at uptrend line plus 590 support. So again, there's a common theme, and that's why I go through all these stocks, that a lot of these miners are either at or very near support. So that's gives you the opportunity, again, as an active trader, puts the odds in the favor of a bounce at or from these levels. So the two takeaways, again, to cover or not the most objective time to short if you weren't already short. PAAS, one of my favorites as well, broke down here, started to follow through, and it's down already off the highs. About 19-20%. First target's 30.41, coming up to that, and 26.05. So, as I said, some of these are at support, but the majority of these silver miners are actually a little bit above support, and we could easily continue on down. So I keep talking about the odds favor a bounce here, but it's not. I wouldn't put those odds at 80 or 90%. I'd just say a little bit above 50%. So keep that in mind, that a lot of these stocks are close to, but not all the way down to their support levels. So there may be some more downside in these miners. And again, if you're swinging and you think we're going to get down here to 26.50 like I do, you may just want to ride out the counter trend bounces. And they're big. That's the thing about these silver miners. PAAS is down almost 12% today. And that's not an unusual move for it. It doesn't do that every day, but there's quite a few days where you'll see the stock drop. Here's a 13% drop, almost 14% back then. These stocks can really move, and it cuts both ways too. When they're running up, they can have big up days. So my point is, if you're going to swing them, you need to use pretty wide stops, and you also have to be pretty selective on your entries. Sometimes get in front of the big moves when the chart's priced into it. All right, next up, ASM. First target's down there at 91 cents. It's already down off the high about 26%. So we've got a little nice correction underway here so far, and like I said, it still appears to me that there's more downside. That's it. I don't think I had that one flagged. No, I didn't. I didn't go over that one. So that's about it. Just look at the Euro USD. You can see that same story. I talked about this part of the catalyst being, on the weekly chart, we had the Euro US dollar forex pair at major resistance, that major downtrend line resistance there, as well as price resistance on the daily chart. We had a slight overshoot of that 118 level, and so if this corrects and we come back in some more, that's going to provide an additional headwind for gold and silver, meaning a falling euro means the dollar's going up. When this pair is falling, euro US dollar, it means the dollar's going up, and that net that's bearish for gold. So that's it. Let's wrap it up here and get the video out to you guys. And if I see anything big on the stock market today, I'll do an end-of-day update. Otherwise, I'm still getting set up. I think I told you guys I moved offices over the weekend, and I'm still working on configuring I've got new monitors I've added and everything, and I'm trying to get all my charts set up. So posts will be a little light unless there's anything big out there. I'll kind of update it, just like those ag input stocks. My favorite MBII continued to move. Let me check it up. Earlier today was up, hit that almost at that 152 target, close enough. So things like this. But again, I did an update on those yesterday, so there's really no need to do another one today. All right, I'm going to wrap it up here and get this out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.